let's look at some charts. So what have we got here? Let's see what tools we have. What's that? Yeah, so just kind of looking at the charts from yesterday, waiting for some people to jump on this so I can give them some tips. Pause. Right, back. Oh yeah. Let's get this up. Some people whilst we are waiting for some people to jump in. Alright guys, how you doing? What are you guys looking at trading wise? Hey guys, what's going on? So charts are looking pretty good this week. Looking at quite a few things on here. Bring this over so you can see. You can see the new setup with the piano as well. So we were looking at Aussie CAD. Aussie CAD's quite interesting because what we've seen is it responded to 50% here and sold off, which is quite interesting. I think personally, you know, this was kind of something which was anticipated. Even though we had that larger structure, it was something that I was looking at where I understood that overall when you do zoom out and you see this, it was quite neutral. It was looking like this could be continuation to move to the upside, but then we also understood that after that huge impulsive move, at least retracing around about 50% is something that usually tends to happen. So marking on that 50% line, which was kind of on the retrace off that little continuation there, came up, tapped into it, and then rejected. It was something I was looking at. That's why I stayed out of that position, which I mentioned yesterday. It's unfortunate. I mean, sometimes these ones go, sometimes they don't. But in this particular scenario, you know, you can see we failed and then we dropped off. You could have potentially taken the entry in this area here to go short. It's just one of those ones. Are you guys looking at anything in particular? If you guys are thinking about what to say, I will likely play something on the piano for you guys. You guys are not ready for this one, so. at a few pairs today actually. It's quite interesting, a lot of price action happening in the markets right now. So we had a lot of recovery plays on board, and I was looking at some of the yen pairs. Any of you guys looking at the yen pairs today? So I've got quite a few pairs that I'm interested in, but you know what I'm going to do? I'm just going to do a quick run through the instruments so you guys can see that. So if I'm just going to adjust this so you guys can get a better view. Give me 1 second. I'll put this here. Flip that. Take the pen out. So what I'm looking at over here is quite interesting. So I'm looking at a few different pairs here. I'm looking at, so Aussie CAD right now, I am anticipating it coming into a bit more off a short. So I will be waiting for this one to potentially break this area here. And then once it's basically broken, I will be looking to go short in those areas. Personally, I'm not the most favorable for a small tight consolidation like that, but I understand, you know, off the bat of all of this, if that fails, if we get something even remotely in this area here, that's more than enough for me to then look to go short. I just don't think it's going to be something so large. I think after we've had huge momentum like that, the retrace comes down, we'll get a bit of accumulation down here to kind of confirm the bat off. All of this has failed, and then we're basically continuing, we're breaking out from this. So adding those confluences up together, that's basically something that I will be looking at. Now, looking at Aussie Swiss, again, it's another one where, you know, we kind of had that near miss to that high there. Right now, it's not really the most preferred instrument just because, as I mentioned yesterday as well, we had the gap to the downside. It was coming back up. If we remotely got something up here, it would have made sense. But right now, it's just kind of a part of this larger correction. Not interested in that at all. Aussie New Zealand, so we were looking at this one for a potential long. I think someone mentioned it yesterday as well, so we were marking that up if we had something there. We didn't quite get that particular trade. However, this doesn't completely write off the long, because what we still have is we responded to the low here, we near missed it, we took out the low, but we didn't significantly break it, but we still tapped into that area. Right now, what I am going to be looking at is how do we respond from this area here? If what we see is from here we tend to get a push back up and a continuation, that would be more than enough for me to try and manage it into those areas there to then see, you know, we're going to continue further. So I am interested in seeing that, but I don't think it's one that I'm going to be taking a trade on just because it's not the best pair in the world, Aussie New Zealand. I think there is a lot of better instruments in the market than this particular pair. So in terms of preference right now, I think, you know, looking at an Aussie yen, for example, an Aussie yen is pretty decent. If I just clear this off so you guys can see a little bit clearer, we can see that over here we had this gap, and what's happening is we're naturally coming to fill that gap. So if I just mark that on there, what we can see here, and I'll take this bit off, if I go to the 4 hour, you can basically see how price is not really moving in its natural course to the upside. It's still corrective, but we are seeing the possibility of this potentially coming back to the downside. So what I am looking at here is how does price get there? I don't really mind at the moment. Once it gets into these areas here, if it finds a base here and then we get a response, we might potentially be seeing this coming back to the upside. Right now it's still a bit messy because when you do look at it, it has tapped into all of that liquidity there. It's squeezed into it as well within this channel. There's the possibility that this just then starts to sell off and it comes to the downside. And a short like that would be much more preferred than waiting for some intraday small lower time for a long. So that's basically what I am going to be looking at across the board on a lot of these yen pairs. Doesn't necessarily mean because we're selling off right now I need to get involved. It means let's wait for the highest possible opportunity so that we can then capitalize with a high probability trade opposed to just trying to get involved. Again, we can see Aussie US dollar. Aussie US dollar did the same thing. It basically tapped into those areas, came in, scooped back up. I wouldn't even be surprised if that was a 50% retrace. So let me just measure that up. Yeah, so borderline 50%, came back into those areas, failed to show continuation to the upside, and then rejected and came to the downside. I was shadowing a trade in there as well, over here. I was looking for a sort of intraday trade in there. Fortunately, it was a shadow trade, so it wasn't anything that I took, but we can see that this failed to commit, became a larger correction, eventually became more of a running channel. So what I mean by that is we had this, it then sold off, broke the low, failed to continue, came back up, respected this channel, tapped into that area of liquidity, double topped over here, and then sold off, broke the low, created continuation, and now it's just continuing to move. In these areas here, this is where I would be a little bit more cautious, and I would wait for something a little bit more developed. Maybe even something like that would be interesting, because then I could play it from here into the low to the downside to fill this area here. So then I can play that sequence there. And I think, again, a lot of the time what I'm looking for is that sequence. So that's something that I'm quite interested in. What's going on? What was that? Sipenshili? It's a unique name. Sip E Sil. I think I've pronounced that incorrectly, but yeah, hey, what's going on? Kajen's an interesting one too. You know, this is one where we have the gap, but it may not fill it right now. So it's something that I will be being a bit more patient with. But the odds are that if we are coming down on the yen pairs, and these pairs which are kind of stalling up here, once they start to commit, they're going to fly. They're going to fly to the downside. And you want to really get involved on those particular sequences. So this is a particular pair that you may want to just keep on soft watch in the case that it shapes up. Yesterday I was talking about an indicator that I'm using, which is called Lux Algo. I'll repeat that again, that's Lux Algo, Lux Algo, ALGO, one word. And it basically just shows me within sessions where particular instruments are committing. So if I go to the hourly, I can see during Asian session, we tend to see a level of volatility come into the market. It's not always the case. New York session over here, New York Open, we had huge volatility. New York Open, we had huge volatility. London Open, we had moderate volatility, but then it corrected during London into New York and then committed. So for me, I'm kind of looking for a New York session sell. So I'm not looking for a London session, so I'm looking for a New York session sell. So what I'm going to be keeping an eye on is if we get a correction during London session and it just corrects and we get something that shapes up and that ends up being, you know, even if it is London session, I wouldn't not take it. If it corrects through New York as well and then it comes into London again or Asian, then I can take that. The likelihood is this is probably going to continue selling a little bit more before we see something because of the positioning. So I would want to see how this kind of continues. And if we do get something remotely there, I'm looking for a session open sell. And what I mean by that is the timing of this will be in combination with a session open. And that's how I'm looking to take it, because that's when the volatility is really kicking in. So that's something I will be waiting for. If we do start to correct in these areas and start making our way back up, I'll just leave it alone until we've really cleared this area here and then we get continuation. I'm not trying to get involved in an area where I don't have an advantage. And really and truly, if price is anywhere remotely in these areas here, it's not worth it because you're within the whole overall range. So the stops and protection isn't really in its optimal place. So that's something that you should definitely consider as well, is where are you placing your stops? I think a lot of the time, you know, we see them little small tight consolidations in here and then we think, okay, well, we've got this, you know, and you're not entirely wrong to take a trade here, put your stop there, but then, you know, you've got that retest there. What if it does extend and come back up and sell off? Then you want to put your stop up there. And then what if it comes up here and it goes there? Then you want to put your stop up there. And then at that point there, the trade's written off. So some particular trades, you do need to accept the risk and take it. But then sometimes when you're high up in the run, like here, and you've got a consolidation there, you can take the trade here, put the stop there, and then you can ride the wave to the downside. So the positioning is much better in certain areas where I'm much happier to go more tighter and more looser in certain areas. But then there's some areas where it's just not worth the risk. because I can go tight, but I can take an unnecessary loss. And for me, that's not a loss I'm happy to take. So that comes into positioning, sequence, entry, comes into all of those criterias. And you have a place, you have to know where and when you want to take these particular types of trades. I am looking at CAD Swiss as well right now. Now, there's nothing particularly interesting about the current price action, but if I go off to the 4 hour, what I am looking at over here is that for whatever reason, price might mess about, but then if it does, you know, kind of just mess about here and starts making its way back up, and it does come back up here, that's where I'll be interested in this particular instrument, because then we've kind of got this sort of falcon flag style trade. So we basically got continuation there that then developed into something larger, and then we've got this 1 2 3 sort of into it. At that point there, I can take advantage of the sequence here. So that would be another interesting trade. It needs time to develop. It may develop into the end of this month, but it's something that you want to pay a bit of attention to because it's a large structure. So you can get scaled in on using, you know, 1 hour and 15 minutes to get into some pretty decent trades on that. Swiss yen, same situation as I said with CAD yen. You know, we're kind of in these areas here until we've really cleared that and we're showing real commitment to the downside. We could really rally back into those areas there and take advantage of that run there. So, you know, if a lot of you are trading funding assessments, and don't worry about it, I've literally just started a few minutes ago. So what I've been doing, Falcon strategy trades, I've been literally going through the currency pairs and I'm only on Swiss yen. So if there was any particular trade, I could just quickly run over it. But basically what we're looking at here is just the sequence here. So if we get the commitment and we're showing that we're failing to continue and we're seeing the yen pair sell off, that's the sequence that you want to be interested in, because the likelihood is we're going to fill this gap, this whole gap here. So if you get positioned in here, that's a pretty good area to get positioned in, because the odds are we're going to come to here, so you can move to break even, probably running a few percent, at least probably 5-4%, and then to this point you're running about 10-13 down there. So again, it's trades like that that can really help you pass the funding assessment and move forward. But it's about understanding how can I repeat that simple process over and over again that will then enable you to consistently grow. It's not just about taking that one trade and then going back to the old way that you're trading. It's about consistently thinking in the process of how can I mitigate risk? How can I get in a way that it has less of a reason for it to come back up there and it has more of a reason to come down here? Well, this is a good enough reason right now, but always something you have to be doing is going back to the higher time frame and look at where the higher time frame is positioned. It is squeezing in a very ugly nature right now, and it's been doing that for quite some time throughout the year. So the odds are, even though we're moving to the upside, you do want to be more on the cautious side. Even though we might be looking for short-term sells, we could see a strong push back up. So that's something that a lot of people do need to pay attention to as well, is that the higher time frame weekly, monthly positioning, even though it's looking like on the lower time frame, the daily and stuff, we could see a sell, we could see a large correction. It's not always the case. You know, I could have said we're probably going to get a correction here, 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 and then what happened was eventually over here we started topping out. Right now there's no signs of a continuation because we haven't had two tops. If we got a double top and then we started to see selling nature, that's a clear sign that you could be selling into probably these areas here to create something like that. And then you've got your base, and then you've got your third touch, and potentially it just evolves and then it goes, and you can get involved in something. I'll show you a quick sample of that because I just saw one on this particular pair. So if you scroll down to here, here's a prime example, right? Price came up, it sold off, tapped into the base, it then came back up, hit the hook point, didn't quite, left the gap to the upside, which is signifying that, you know, we're probably going to come and fill that gap at some point. It then came back down, again, tapped into the hook point, failed to go, came back up, hit the hook point there, and then eventually came down to this area here, and then it went. So again, there's a methodology to it, and being able to read the price action, it's quite interesting when you do kind of read through it. So there's your little hook point there, there's your hook point there, there's your little hook point there as well. So what you can see is top, base, taps into the base there, then comes up, taps into this point here, leaves a hook point there, sells off, taps into this point here, comes back up here. And fundamentally, this is basically swing trading if you really want to be catching each and every pivot in it. And the beautiful thing about it is you don't have to just catch the trades here. You can also catch the trade here, you can catch a trade in here, you can catch a trade there, you can catch a trade here, you could also catch a trade there. Potentially, if you wanted to catch a trade there, there's probably a trade in here too. And then again, just comes down, and then it didn't quite tap the low there, but it doesn't always need to. It's basically tapped into that whole area there, and that's the most important part that you want to be focusing on. And then after it's gone, it's failed to create continuation and a potential trade in there. Again, we've then started moving to the upside. So you can see I've just outlined how many small trades there are in there. And remember, I'm just looking at it on the daily. I haven't even used the 4 hour, I haven't even used the 1 hour, I haven't even used the 15 or the 5, or even for some of you, the 1 minute. So see that right now, that there's just an abundance of trades when you don't need, and at this point here, we wouldn't have known that this was this particular structure. The only time we would have understood that this was potentially becoming a long continuation was when we created this base here. When we had that base there, that was then signifying that this is now developing into something. And then at that point there, you can take advantage of the whole middle section and then the bigger run there. That's the run that I'm interested in, that particular run there. Those are the runs that I'm interested in. That's where I make my money, and that's what I'm looking at. So I've got quite a few pairs on watch personally. If I just bring it up here, as you can see, I've got quite a lot of pairs there. Obviously, there isn't one in particular that I'm focusing on. My main focus is primarily based around the looking at continuation in this area. So I want to see the DXY tap into these areas, or even if it extends further, but I'm waiting for the DXY patiently to come here, and then I want to evaluate how price is going to get there. So if I go down to the 1 hour quickly, what you can see here is I'm basically waiting for this section to develop. If we can get something within here which is remotely within my trading plan, I'll be looking to go long into that area there. So then, and I'll try getting pretty aggressive. So let's say that this sells off now, comes in, creates a base, and it comes back up for whatever reason, and then it sells off again. It would be that area there. So it's either the 2 touch here or the 3 touch that I'm looking at, and then that would be my base and that would be the high. And I'm basically looking at, hey Ankit, what's going on? So yeah, essentially you can see 1 2 3 1 2, that would be your near miss as well. The psychology of this whole overall trade thesis would be perfect, because I can get in these areas, I can get in on the insurance entry, I can get in on the small liquidity outside of it, and then trading into that point there. I've probably taken 3 or 4 trades and they're pretty low risk. And then at the end of the day, I've walked away with maybe 13, 14% with the scaling opportunities. So putting your full focus and attention into something like that, you can make a huge amount of capital just by being patient. So you can see, as I mentioned, we're just now with Swiss yen. It was underdeveloped until we had the 2 touch. At that point there where I have the 2 touch, I know, okay, well, I've got my 2 highs, I've got my 2 lows, there's a near miss, this is probably come to the upside, I can play the 2 touch to fill it. And then if we do get impulsive behavior and it continues, then great, I got positioned in here, and maybe I got an insurance entry in there if I really wanted to, and then I'm playing that to the upside, and probably still walk away with a pretty decent amount of percentage. Haven't measured this up, but let's say I took a risk entry here with, let's say I even got in with about 25 pips. To the filling of the gap there, I'm looking at 5.8. You know, then I take another trade here. Again, I'm looking at another 4.6. Let's say I've got another trade in here as well. Got about 2.5. So again, I'm looking at just over 10%. Just on focusing on this. But then I might utilize something like a USD yen, where USD yen might develop. I might be able to take advantage of USD yen. Swiss yen is something more preferable. If we get that clear continuation, that's something I could take full advantage of. Would see this develop whilst the DXY does, and then I could play this to the upside, and then we might see something like a Swiss yen really recover to the upside here. And then on the DXY, I might be looking at something like a 10 to 1, But then on Swiss yen, let's say I get positioned in there and I get in, you know, with about 20 pips, you know, with potential scalings, that one trade alone has an 8-to-1. So I could even hedge my risk across a few pairs and I could play that DXY movement. Fill in the near miss, yes, fill in the near miss. What's your stake on corn and Bitcoin? Interesting. All right, let's check out corn and Bitcoin. So corn is a good pair, to be honest, but it's a natural commodity, so economical things can affect it. One thing I would say, and which I do, is I like to see how seasons respond. So for example, I can see here in July 2024, when did we have this huge downside? We had the downside around about April. When's the next April? Around about here. We had another downside this April. If I look at another April, let's see. Yep. And then April here, we had another downside. What about this one? Yeah, around about here, we had April, another downside. So I know April is a great time to be shorting. Obviously, I've studied these particular pairs, but you know, if you're trading corn, it's good to kind of just understand economically which seasons the commodity does well and which ones don't. For example, you know, there's periods of the year where they're farming, yeah, or the demand gets extremely high, so the price of corn drops because they're able to sell more. So it's just certain things that you can learn about pairs, and you don't have to go off and read about it. You can actually just read it through the price action. You know, you can see if you pick out April periods. Now, it's not always going to be the case. Some April periods, it might push up a little bit higher, but the dominant part is the side effect of an April is we see a selling nature. So I think what we could be seeing now is we could be seeing a buy up until April next year. So we could be coming back up to the upside. So I'll be looking at, if I'm taking any trades on this, which I probably won't be, I'll be marking on, let's say, this area here. And obviously there's a small hook point to the left. I would then be looking at this a little bit carefully and being like, okay, well, how is price moving to the upside? We can see that there's a small little hook point there. We have a bit of liquidity there, which I wouldn't be surprised we go and seek those. We have a gap as well, but you know, gaps don't always necessarily have to be filled. You can see here there was a gap here, and then price just sold off and never came back to it, and that gap was in July, and we've only just come back and filled it in September. So same thing here, we may not even revisit this gap. What I will be interested in to see though is two things. If we develop and we get the continuation and it's flat, and let's say we do get something like that, you could potentially play this overall move, and then let's just say for some reason it's filled the gap here, you know, because it's very close. I wouldn't be surprised if you got a trade there and you could just ride it to the upside. Like I said, this pair doesn't move extremely fast as well, so you know, and I don't know what swaps are like, so you might end up taking the trade and you have to ask yourself, like, if you're in an assessment, is it worth you sitting in a trade for a few months? If it's personal capital, it's worth it. If it's so if it's something that you're happy to take the long-term trade on and kind of just sit on your hands, then I'd say go for it. Sometimes, you know, these trades can be very slow and you don't want to be stuck in something that takes forever to move. So that's it. I mean, most likely you're probably asking me about some intraday move right now. Personally, I wouldn't be looking at any intraday day. I would be waiting for clear structure to develop before I even touch the pair. So I would want to see, you know, some sort of development. Like you had this section here, it just didn't complete, so there was no trade for me. I would have waited for this to come down, tap into those areas, at least do whatever it needs to do, give me insurance entry if it did that, and then I would have got involved there, and then I would have played this to the next trade, which should have been there. But then you ask yourself, okay, well, with spreads and swaps and all of that stuff, let's say I took the trade here and I took it with, let's say, 25 pip stop loss. Okay, it ran to around about 10% there, but again, it's like now stalling. That only took a few days as well, so it's not a terrible instrument to be trading. We could see, you know, some pretty good price action, but I understand that when we start hitting certain areas, we can slow down. Just wait for structure. Truly, I don't want to go in circles on this. I think, again, if we don't look for structure, we could forecast 100 different variations, you know. For example, this scenario here, all you had to do was wait for structure. You know, you had your 1, 2, 3, you would have taken it here. It then tapped into these areas, failed, came back up into those areas, sold off, gave you an insurance entry there, gave you another insurance entry there, gave you another trade there, then broke the low, started developing here, impulsed out, then it gapped, came to the downside, failed to continue there, potentially a loss, I'm not sure. And then what happened is it retested that whole area there, sold off, gave you another continuation there. You could have taken a trade in multiple areas already. Like, I'm just circling the ones that you could have taken advantage of. There was a trade here as well. And bear in mind, I'm still on the 4 hour. So you can already see, like, if you understand your trading system and you understand your trading plan, you could get involved in so many different ways. What's this? UK 100 insurance entry. I'll just double check Bitcoin quickly before I do that. Let's have a little look. So Bitcoin, yeah, Bitcoin's good, man. Bitcoin is looking nice. So we did have that massive drop off here where it taps into those areas. I do think we're probably looking at two things. We're probably going to come back and fill that with full price action, and what I mean is like with a candle, and then we'll tap into these areas, and then once we've tapped into those areas, you can look to get long on something like that. I think that's a much better play. If we do, for whatever reason, sell off sharp and come to these areas and then we come back up, same situation, just wait for that insurance entry. I don't think it's worth risk entering something because it's on that base. I think just wait for a push up and a flag. It's very likely you'll get that. And then the odds are, if this does commit, if I just zoom out to the weekly so you can see it, you can see how price is moving in sequence. Correction, push up, correction, push up. A bit more steep, but correction, another correction, and then it will just go, and it will just continue, and it will probably be over here, stalling around about 140, 150, and then another correction forms, and then it just keeps going like that, and then that just becomes the nature. UK 100, hey, what's going on, Andre? Good to see you too. So UK 100, let's have a little look at that. Weekly, yeah, weekly is looking a bit bullish, but you know, we can always have sell-offs within this. Let's have a little look at the monthly. Yeah, monthly is also looking pretty strong to the upside. You know, you can see that strong momentum right now. If I go down to the daily, you can see I was looking for a larger flag continuation in these areas as well. Let's clean that off. Yeah, good. So we can see that we had the retest, price came down impulsively, tapped into this off last week's news. The same as we were saying with the S&P, a lot of the time we see these sharp sell-offs and then it just recovers. So what are you thinking about that insurance entry to the upside? You're thinking about this. All right, so let's have a little look at that. So we've tapped into liquidity. So in the sense of, you know, the volume was sitting here, the retest was there, we came down, we tapped into the retest, and now we've pushed away. I think it's done what it needs to do in the sense of coming to the downside. Even with this small little hook point here, it's tapped into that as well. So I think it's done more than enough. I don't think there's anything wrong with an insurance entry right now, because also as a cherry on top, you basically filled this gap. So I do think that if you're taking an insurance entry, it's not the most cleanest, but it's definitely, yeah, it's definitely there, man. There's nothing wrong with it. It's just right now, obviously you have to accept the risks with this. So if you're taking an insurance entry, let's say anywhere remotely here, and you're putting stops, I'll probably go with a bit extra on this. Probably go about 45, 43. You're still playing about a 3.3 to the high. And I personally don't think it's the best trade in the world, because as I've just shown you with a few other pairs, you can wait for a particular sequence after a clear, larger structure completion, and you could walk away with like 7, 8, 9%. Nothing wrong with taking this trade, don't get me wrong, this could continue moving higher, but it's not going to just fly to like 10% for you. So if you're getting in this, I can assume that you probably want to get a bit more aggressive, and then you're probably going to say, well, let's see if we can get an insurance entry and get tight. But then this is where I usually find myself looking for trouble. So I'd mark that on. I'd see, okay, so we're kind of correctively scooping to the upside. If we break this and we get continuation in these areas, you could argue the point that I could manage it into there. So you could take the long here. You could get in much lower than, you could probably get in around about 15 because you're still covered with the retest there. And then to the high, you're playing about 1.6. If I just zoom out to the central time frame, the 1 hour, and we go back up, yeah, you're playing with about 10 to 1 to the high. So that's probably something that I'll be more lenient towards. However, you know, I have to accept the fact that, you know, I'm basically banking on this overall structure being it. So I like this trade idea a lot more than playing the larger stop loss here. But again, for me, it still feels a bit high risk just because I look at it on the 4 hour, and after a strong sell-off like that, it's not really showing me recovery play. It's showing me like, what if we're coming back up here? We're just going to retest this. We're going to come down. So you want to be able to manage this really and truly. You want to be able to get into this particular trade. You want to be able to take your risk off the table as soon as possible without having to get caught into something. So I would say insurance entry in these areas, play it to the upside, you're good to go. That's probably your best bet. GJ, any thoughts on GJ? Yeah, for sure, man. GJ, I actually really like this pair as well. All the yen pairs are kind of like favorited at the moment. So GJ seems to be, again, it's one that I would wait for session to kind of shape up. I'm going to put my little indicator back on. Let's just quickly put it here. Yeah, so we can see Asian session we sold off already. So this is quite interesting. I think the fact of the matter is we're pretty much coming back to trade into those areas there. We haven't really tapped into it, so I think shorts are still on the table, but I think there is some better yen pairs to be focusing on. I think GJ's nice. Let me just put that in comparison. I don't know if you do this, but I have a separate watch list where I put all the yen pairs on it. So then when I am picking a yen pair, I will do a filter through, and it's something that I think definitely does help a lot. You can see that JP225 filled its gap as well here. So it hasn't got much reason to come to the downside just yet. So we might see the Japanese pairs still gear up and move higher. We do have gaps. So EJ looks a little bit nicer for the short in my opinion. If we're going short on this, you know, you can see clearly if we break that low there and we come down here and we get continuation, you've got a clear run into that. NJ, do you know what? NJ is looking good because it's within the range. It has the gap down here. If you get a continuation here, I think that's a lot better. That's solid because you've got an A to B movement in there. It's very clear as day. And then the odds are if the yen pairs are still selling off, you've got your NJ trade from here to here, and you're pretty well protected in the sense that it hasn't got much reason to go against you. So NJ is definitely a solid one, and it's a very reliable pair. So if we look at Aussie yen, probably least favorited to be honest because of where it's positioned, how small the gap is. If I look at it on hourly, yeah, I'd be a bit more careful with Aussie yen. It's one of them ones where even though we've got prime positioning on the daily in terms of tapping into that hook point, we kind of squeezed into it as well like that. I would really want to see this one sell off, come down here before I start taking a Aussie yen trade. So Aussie yen would be one that I'd wait on a little bit more. GJ, you know what, GJ, because as well GJ has this high here, it could mess about with you. It could still come lower, but it may not come lower in the same way we might see some of the other pairs being aggressive. So I would keep an eye on this, but I wouldn't prioritize. I think NJ is definitely nicer in comparison. If you're taking a trade here, it's two ways. We either develop above this now and we get something like that, and we go from here, and then, you know, arguably, let's say it retests something like that, it's there, you've got a few confluences, and you can at least manage it into that point there, and then probably here, and then the gap fill, and then lower. So you've kind of got a few points that you can kind of look at. In the case that it doesn't correct above and we kind of just continue selling, it will be similar to what I said with CJ and Swiss yen, is I'll just wait for this to develop below that area, kind of through this point here, and then you can take advantage of something like that. And even if it did retest this, great. If it's that close and there's a gap between that retest and there, I would put protection above just for the extra protection of safety. And then I basically play that to the downside. And then if I just measure that out, let's say the trade shaped up here, I could get in, do you know what, even with a 66 pip stop loss, you're still able to run around about 4.5. Obviously, we're not trying to get a 66 pip stop loss. We're trying to get in a little bit tighter than that, but I wouldn't write off the trade because it's 66 pips or something. Even if this came in and yeah, 35, you know, if I could get in 35, then I'm looking at a 10-1. So a lot can really change and work in your favor. It just really matters on how it develops, where it develops, and GJ needs a bit more time. I think, like I said, a Swiss yen over here, this one looks solid. You can see it. If we get that particular trade, not all this nonsense. Yeah, if we get that trade there, that would be solid. You could then manage it clearly to the downside. We just need a break of that low. So some of these pairs do need some time to develop. I wouldn't jump into something because it's lower time frame. This can still correct in those areas, catch you in and out, and you don't want to get caught into something unnecessary. I think you want to preserve that capital, wait for those high quality trades. This would make it low risk. This will make it high probability. There's no reason at this point because it's really cleared all of that. It's coming with momentum. It's accumulating volume. And then it's got a clear run to the downside. Nothing's really stopping it. The odds are we may not even get that correction. Why? Because once it starts breaking below there, it doesn't really have much reason to create such a large flag. It could just continue plummeting. So at that point there, you might need to start going into your momentum plays. You might need to start looking into your 15-minute flags and just evaluating how the sequences run into the downside. So be able to make that shift, because really and truly, like, you know, a lot of the time I've been caught out where I've been waiting for a 1 hour flag because I'm thinking, okay, you know, whatever. But during all of this period, people have been swapping their positions. All of this correction here is people getting out of their longs and swapping in for shorts. So they're getting repositioned. So you can then take that as two things. This is where the volume is being created. And then the impulse is basically where they're just basically pushing the price. And we might tend to see that because a lot of these yen pairs need to kind of make a bit of a move. So a momentum play could definitely be there on the board, and then everyone's missed a trade around about these areas. They start FOMOing or whatever, and then what happens is it starts recovering and coming to the upside. So keep that in mind. You want to have that EN short. Let's have a little look at EN short. Using insurance entry. Okay, so EN, let me just zoom out on this. Weekly. All right, so EN, clearly we can see we've got, you know, price basically here. You can then argue, you know, what about this? And then you can draw that on. So that's one thing for me, it's a little bit of a red flag, because then it starts misdirecting you for the shorts. And I like this about yen, because Euro New Zealand, because it does stuff like this quite often where it doesn't make it simple for you to understand what is the trend line. So something like that I wouldn't be using at all. I wouldn't be even looking for that 1, 2, 3. I'd be aware that there's a possibility, but I'd be looking at two things. I would say, okay, this hook point clearly stands out over here, and this hook point here, right? So I'm looking at those two hook points, that one over there, and this one over here. I want to see how price is responding. Where is price? So next question is, let's evaluate from that hook point to that hook point. How did we get there? Well, we can see that this is corrective, but within that correction, there was a middle section correction as well. So it was kind of a bit like that. We then tapped into it, but we failed to sell. That's a very key point there. We tapped in here, we had continuation, it failed to continue in that area there. For that reason alone, I would be cautious if you're looking at a insurance entry to sell, because it's failing to sell. It's showing signs of price is just pushing. So this is the weekly. Now let's go to the daily. Going into the daily, you can already see that now I'm a little bit more cautious when looking at shorts. I'm kind of more building a bias to the upside, but let's have a look. So then we have this hook point here. Same situation happened again, right? We came from here, we tapped into this area here. After we tapped into that area, what we saw here was price came down, had a correction, and then it sold off again, broke the low, failed to create continuation here, and came back up in the form of a continuation to the upside. And it's basically making its move to the upside. So I would be now looking for the next continuation, because the sequence is showing a corrective move to the upside. It's not showing any signs of a sell, even though it's positioned in a value area and it's broken above in a corrective nature. The only time we would pivot is if we just did that and we cleared the trade thesis for a long and we had continuation, you know, trading into something or even below this to then trade to the next point, which would be down there. So I don't think I'm going to be looking for shorts. I think, you know, that would be your line in the sand. That would be the next point, and that would be the next point there, and then so forth. And you'd basically just trade cautiously into that 4 hour. Now I can start establishing what type of structure we're looking at. So we can see it right here. As we broke, we created this small continuation. It seems like we might have already retested it, so now it's becoming a little bit less relevant. I'm trying to find my tool because I moved it, right, it's there. Okay, so we can see that we had small consolidation, we came up, we moved up, we created the first top. Interesting, so this is probably the insurance entry you're looking at. So you've got the first top, we've then scooped into this, we're now trading into that area there. You'd be waiting for insurance entry to then trade back into that area. I don't think that's a bad trade. I think that's pretty decent. You know, the context is there, but the approach, the 3-touch was pretty not, it wasn't so good, to be honest. But you know, if you're looking at it like that, this is on the 4 hour, bear in mind. So I'm basically looking at this as the squeeze into that area. Then I'm going to refine it on the 1 hour. I'm going to wait for a bit more confirmation on this. So there's 2 ways that you can really take this. And I would personally be saying, and I'll mark them out high risk to low risk. So obviously this is a good sign so far. We're showing a good sign, but we want to see commitment. If we get the first flag in there and then we start breaking, we get another one there, and then we start developing here. I just want to kind of point this out. That's high, that's pretty decent, but that's high risk. This one's a little bit better because you can manage it into that low. So it is lower risk, but it's still higher low risk, right? Because of where we're positioned, you know, it's still within the channel, but this one is broken out and it's basically acting as the outside hover. That one becomes low risk. Pick it how you choose. I think the higher low risk trade is the decent one, personally. The high risk trade, if you're up and you can afford to take it on a refined time frame, probably shape up on the 15-minute with a 5-minute refinement. Yeah, you could probably take that. But again, you know, these things are decent because the sequence is there. It's just, again, like I said, the shorts are not the favorable higher time frame, so you will have to trade cautiously. But you can see trading into that low there to then fill that potential gap, you know, with scaling opportunities. If I just took this one alone, the higher low risk trade, I'm then looking at, let's say if I took a 30 pip stop loss, I'm still trading a 6-1 on that. And then the next one I'm looking at is over here. Let's say that's the low risk trade. Let's say I took it with a 30 pip stop loss as well. You know, I'm still trading with about a 5-1 there as well. And let's say that, you know, I was in the position and I decided to take the high risk trade, right? Because, you know, everything's there, it's on the table. Probably wait for that 50% retrace as well if it comes in, or if that pin bar is solid. It's kind of looking like it's going to be an evening star. So that 50% retrace is even more important, and you might get the insurance entry within it. Again, that's like what we're looking at. We're looking at, let's say, about 12 pip stop loss in there. Yeah, you're coming in with about 20-1. I wouldn't, the 20-1 trade as well, I probably wouldn't be holding for the full 20-1. With a trade like that, I'd probably be looking to get out for about a 5-1 to that low there. And then with the scaling opportunities, I'll probably make up the rest. Because then what that means is I'm looking at that as the total sequence, but then I know that I can use the profit from the first trade to then scale in on the second and the third, potentially even a fourth. But then the interesting thing about it is if I get caught out on a trap between that, I'm still going to be in profit. So yeah, sure, you could say that, oh, but you had a 20-1 on the table, but you walked away with 5-1. But then the odds are I was able to use the profit from that to then get in on a 6-1 and a 5-1, and at the end of it I walked away with, call it, about 15-1. So that's a nice part to it as well that I would keep into mind, but it's how you really want to manage it. Maybe it could just fly, who knows. Let's see, GN is better than EN. Let's see, GN probably is going to be looking nice, but you know what? Something that I do remember quite a lot is sometimes I'll take GN and EN will fly, and I'll be sitting there looking at GN like, what is going on? And then vice versa. So I see that. So you're looking at the daily, you got the value area there. On the weekly, we actually have another value area above, but it's quite far away, little hook point. And then we have the higher dominant time frame way above. Nature of it is pretty corrective as well. So considering of where we're positioned, I wouldn't be surprised if we did start seeing some level of continuation forming. So you could be right to be looking for potential shorts. I think the approach as well, if I'm looking at this, it's basically scooped back to fill this. I know with GN and EN, you know, they have the nature of just kind of extending and tapping into the next points. It's squeezing right now. I think what I would be doing is I would wait patiently if you're looking at something like that. I'm not favorable for a structure like that at all. And I wouldn't be drawing on something so large as well. So I think the approach, you kind of have a 3-touch in there, maybe a 4-touch arguably. It's coming to that point. You'd have to really wait on this one. Two scenarios, and this is the 4-hour. So you clear that low, you come down, you get your continuation here, and then you can basically play that into the downside. So then you get in position below that low there, or then this develops above here and continues higher. And that's basically as simple as I'd keep it. It's those particular scenarios that I would keep in mind. What's your thoughts on New Zealand CAD Friday's entry? Was it a good entry? But yeah, just to finalize it on GN, you have the structure as well. So I'll be honest with you, if you're playing this as a structure, that's a low risk trade. Your high risk trade is anywhere in between that. So just so you know that if you're trying to figure out your high risk, low risk. And then that would be low risk as well, because you're basically playing off the volume of all of this accumulation. You're playing that as the middle section there, and then you're basically playing it to the upside. But again, it is corrective. So it's one of them ones where price can just make its big swings. Even if you're getting involved in some sort of continuation here, wouldn't be surprised, you know, if we did that and then we did this and then we did this, and you know, just kind of just continued in that nature. And then at the end of it, you're looking at it and you're like, okay, well, it was one big channel here and it was just continuing. So the territory that you're getting involved, I don't think it's that, because I think this was one piece of its own, this is one piece of its own, and then it's going to create a new piece of its own into these areas here, and then you should have that level of pattern separation. Let's have a little look at that trade. So we've got New Zealand CAD. Let's just zoom in a bit. New Zealand CAD, right. Is that correct? So Friday's entry, let's have a little look. So I was waiting for an insurance entry, so I assume you're talking about the one here. Thursday, Friday, yeah, okay. I think I was talking to somebody about this trade, or I made a video about it, I can't remember. Let's quickly just clear this off. So New Zealand CAD, obviously, from looking at it on the higher time frame, it looks messy. It does look messy, but when you break down the price action and the pattern separation, it's actually extremely clean from a technical perspective. So what you can see here is that, you know, you've basically had this accumulation, it's then failing, it's then come in, tapped into liquidity, sold off, this sharp sell-off here, and then we left a bit of a footprint here as we broke, and then we've created new lows there, we've come back and retested it, and then we're showing signs of continuation to the downside. So I think I assume that's basically what you saw building up to the trade. And then we go down to the 4 hour. So we've established we are looking for shorts. And the only time we kind of knew that is after we committed. So there was a few little signs. So we had this section here that we knew that, okay, there's two ways. This is beautiful actually. So I think Monday there was a much better trade. I'll show you why. So we had the liquidity here. At this point here was kind of expanding, and the thing we know about expandings is they can work as continuations or reversals. So you kind of have to be a bit more cautious with how you take them. But when this completed, it was basically around about Monday open, around about there. So it's not really where most people are looking to take their trade, right on the open. But if you look at it in terms of a reversal, it got there, did an expanding, and you went for the short. I think that's a crap trade, in my opinion. In context, it looks great, but just because of it got there impulsively. So it's like a push up and expanding as a continuation to continue. If you got in there and you took the loss, you wouldn't be surprised. You'd be kind of like, okay, fair enough. But if you then refine it, and the beautiful thing about it is, once that expanding basically failed to continue higher, what happened was the sign was we had this, and then arguably, you know, you've got this, that's your low off it. It then started to exhaust around about there. You could arguably say, okay, is that the base? At this point there, that's not your regular price action, but anyway, you've got, and then you're probably cautious with that point there, right? You then can go down to the 15-minute just to refine it a little bit further to see what's developing. And you can see this beauty here. Already saw it without even having to get there, because once you study these things enough, you can see that continuation there and a continuation there. Those are your real trades. Those are the ones that in theory are higher low risk. This one lower risk, this one is higher low risk, right? And I'll tell you why, because this one's higher low risk because it's basically sitting where all the volume was. So it's got an odd where that can basically become a double bottom, and then it just starts making its way back up, right? And then you're like, okay, I was wrong. At this point here, it's basically broken. It's confirmed that, okay, that was great. Then it's tapped into liquidity there, but this one is through the low. So this little bit of price action here was basically high probability, low risk, which is even better. Odds are when that committed and it failed there, you would have been out the market there. So you wouldn't have made a huge amount of profit, but you would have made a smart play, even on a reduced risk entry. You know, you could have taken that 15 pips and you'd be out for a 3-to-1 pretty fast anyway, which is pretty decent. Arguably, yeah, you could have gotten a bit tighter. You could have gotten 10 pips and you could have walked away with 5% as well. Depends how you take it. The one above it, right here, which I said was higher low risk. Again, you could have gotten with this one, I would say around about 13 pips would have been sufficient. Yeah, about 5-to-1. Ultimately dropped for about 7, but you would have managed it accordingly and you would have walked away with about 5.3. So 2 trades alone, you see, the great thing about it is you can see a larger structure play out, but then you can understand that there's going to be so many trades coming after it if you remain neutral. So yeah, I hope that was useful. Any questions regarding that, or did you not understand something? You want me to go over something again? But yeah, you can kind of just see that in itself, but you have to refine it. You see, that's where level of refinement comes into play. Let me just grab the charger. Yeah. So as I was saying, it's just one of those ones where if you get to the point of level of refinement, you'd be able to really, really capitalize, man. I think this as well goes into a conversation I had with a friend yesterday where he was looking at Aussie CAD. He took the long, and I told him two things. I said, just be very cautious. Be very cautious with the long here. He took the long on the 15-minute over here. I said, it's a great trade, but the bigger picture is showing you that we could potentially be selling off. So you have to be very careful with a trade like that. And I think yesterday on yesterday's live, I was talking about this trade. Someone asked me about what about the long. It was decent. The long was there. It's just you got to be careful with a trade like this. You're managing about 2 point something, so you could easily walk away with a break even on this, right? But the case is if you've got a strong bias in place, because you're looking at it on the higher time frame and you're like confirmation bias, we've tapped into the low, strong push away, we filled the gap, we're good to go. And don't get me wrong, you're kind of correct in looking at that for a long. There's nothing wrong with that, but you have to understand that there's certain tools that you can use to help protect you from unnecessary losses. And this wasn't an unnecessary loss. This was a good trade. It's just if you took the loss, you should have mitigated against it, or you should have at least halved your risk. So you should have put a partial reduced stop loss on your trade. So rather than leaving it as a full loss, you half it. So if you've got 0.25% risk, you've halved that amount of risk by moving the stop loss from 10 pips to 5 pips, for example, because it's unnecessary to have that full amount of risk on the table. So again, you can see tapped into the high. I wanted to just kind of break this one down quickly as well. I know I did it at the beginning of the video, but I think there's a very important lesson in this. We have a strong push away, we have a corrective push up, we have liquidity sitting in these areas here. Price has come up and tapped into it and sold off and failed. Then it's come back up again and created a double top. After we had the double top, we had a strong sell-off. After we had the strong sell-off, you can see that we had a gap and a strong push up. What does that gap do to people on a Monday morning? You know, that gap is basically convincing people that, fuck, you know, last week we had huge momentum at the end of the week. We've tapped into something. Let me just get involved. Then you see it and then you get a bit excited. During that moment of excitement, you can't think rationally. You don't put all your tools on to see both sides of the trade. You see why the trade could do really well, but your mindset is not looking at why the trade may potentially not work against you. When you're looking at shorts and you're quite neutral and you're able to use your full ability and full analysis to look at both sides of the market, okay, where would the shorts come in play? What variations could prevent me from making money? You're going to then see that, you know, you can see these things a lot better. So I mentioned the 50%, we're coming into 50%. We're still in bearish territory because within the range, you've got the high, the low, and the medium. The medium's the 50% range. If you're looking at shorts, you want to be below that 50%. If you're above it, you want to be looking at to the long. If you don't understand that, you can study it. You can select ranges and measure 50% and see how does price respond to 50% of the range. There's a lot of people out there who trade things like Fibonacci retracement, and just general 50% and stuff. And a lot of people are placing trades in these areas, banks, institutions included. So they hold weight. And what makes it even more important is when structure or retests align with those areas. Because what that means is when you get these sharp moves high up in the run, that's the V shape, right? So when you study V shapes, you start to notice things like that when you put your analysis together. So if you want to get better at trading, especially with this particular style, you want to start using the 50% retrace a lot more. It'll give you that additional edge where you can measure from high to low, the previous high to the previous low, right, on a higher time frame. And you want to see where 50% is. If 50% aligns with a retest, you want to be cautious, especially if you're trading into it. So it doesn't mean you get out of your trade. It just means that it's one more additional confluence that you put, which is working against your trade. So that if it goes against you, you don't get upset. You don't think the market is against you. Your psychology is not compromised. You understood the risks so that you can move on. Where a lot of the time what happens is, and the reason why people do spiral or why people aren't able to progress, because they take a loss and then they get upset and they take another loss and they fall into a low vibratory state, is mainly because of situations like this where they're unaware. And don't let something like that affect you, because a trade like this was sick. This was amazing. This was a really, really good trade, phenomenal trade. But the problem was we failed to commit. We retested and we failed, and it came in with a V shape, and it was just unfortunate. It is what it is. But understanding that that was a possibility and seeing it play out actually makes you feel a little bit better. Even though the trade didn't work in your favor, you understood it. So your technical ability and your mindset was not compromised in any way. If you didn't see that, then the great news is now you've got something to go off and study, and you can better yourself that 1%. So something to bear in mind. I know it's a bit unfortunate that something like this did play out, but the trade looked good until it didn't, and now we're looking at shorts. So if we do commit and we get continuation there, we can look to sell. Even if we get it here, not too bothered. If we get a large continuation now on the 1 hour, probably not that large, probably more in the size of this. If we got something like that, I would be favorable for a short here to then play that to the downside. I think a trade like that would be pretty decent. That could pretty much move, and then next thing you know, we could be moving on to the next area. So you're still in a good position. It's just these things happen. Any more question, guys? Any more questions? Let's see if I missed anything. Ian Short, GJ UK 100. Nope. Let's have a little quick look at US 100. Yeah, so this kind of follows into what we were saying about the UK 100 sort of trade idea. It's probably going to get messy, but it'll probably recover at some point. I wouldn't get attached to that big sell candle. These things happen, but you can see it's already recovered a majority of that candle. If I just measure that up, yeah, borderline 50%, but it actually broke above the 50% as well. It's now hovering in that area. It's still got a bit of a gap as well there. So I wouldn't be surprised if price did sell off a bit, comes down, and then just recovers. And then next thing you know, you've got like some not so clean price action. So I wouldn't be looking to get short there. It's not my preference. Like I say many times, you can take advantage and make money consistently if you do this. And I'm just going to go back to the DXY. Oh, okay, maybe not the DXY, but JP225. And I'll pull the chart up here. So if you wait for a daily time frame or a weekly or 4 hour, and it does something like this, right, it looks messy, but it's there. You've got your first top, you've got your near miss, you've got your fill, you've got your bottoms. So what do you have? You have two bottoms, you have three tops, you have a gap. Maybe you even have internal structure, right? Doesn't really matter. Whatever there is, at the end of the day, at this point here, price has made its third touch. At that point there, you can draw your line in the sand and just wait. You get your continuation here, you can get in with precision, and then you can play it to the downside there, and then let's say you've got a 7-1. So yeah, do you track all those pairs daily in the morning, or you said? So I don't track all of those pairs. What I do, and I'll pull up my Notion quickly, is basically I'll have something like this where I will be trading London session, I'll be trading New York session. And essentially, I'm trading London, New York session, and within those sessions, I'm basically establishing prior to the session as I'm doing my morning routine, which essentially gets me into a good flow state. I'm preparing myself to then see which pairs from yesterday, because, okay, so everything works yesterday. My morning routine starts yesterday. So yesterday evening, for example, like your SMB, I would plan my Monday. So then I already know on the Monday morning, ideally I have a rough idea of what I'm going to be looking at and how I'm going to be taking it. The Monday morning comes around, I'll do my morning routine, then I'll do my morning forecast. When I do my morning forecast, in that point that I go over those pairs that I was looking at the night before, but I also look at the other pairs just as a quick scan to see what could potentially be forming. But more importantly, I'm only looking at what's going to shape up during my London session. I don't care about the rest of the pairs, just what's going to shape up in London session. After London session's finished, I'll do a London session review, which was that document I just showed you, where I would ask myself some psychological and strategy evaluation questions, such as, how was my emotional state before, during, and after trading? How did my emotions impact my trading decisions? And what can I do next to maintain a better discipline? So in my next session. So then after that, I will crack on, walk my dogs, reset, do some meditation, and prepare myself for New York session. The same way I prepared myself for London session, I'm now preparing myself for New York session. So I go through my pairs again and see what was correcting over London session leading into New York to potentially give me that entry. Then what I can see is I'll go over my data. My data will basically then establish to me what pairs primarily go through New York session. If I don't know, then I can put on that Lux Algo indicator, and that will basically show me what pairs do commit quite well during New York session open. So then I'm more aware that these ones are quite hot, these ones could potentially start committing, and if they do commit, they're quite high probability because the data is also backing that up and it's supported by structure. So once I have that in place, then New York session starts, I already know what I'm doing and I take the trades. Within the first 2-3 hours, I'm no longer taking trades 4 or 5 hours into a session. It's usually within the session open and maybe within an hour or two prior or after. Then after that, I walk away. I do my New York session review where I basically ask questions, same questions, but then I'll be asking, was there any trades where I deviated from my setup and my rules? Why? Did I manage my risk properly, position sizing, stop placement? Was my execution timing aligned with session volatility? And then how did the volatility compare to London session? So then I can basically take or extract as much data from the session and then put that into a place where then I can review it at the end of the week and also the end of the month, and then basically take some more data which will then help me into the weeks coming forward. Most important thing that I do ask myself at the end of day report as well, which basically comes at the end of my New York session when I cut off for the day, is the biggest takeaway from today's sessions. What will I adjust on my focus for tomorrow, and put any screenshots and examples that could help me. And then I rate my overall session as well, based on my flow state, based on, did I miss any trades? How did I act? How did I respond? Did I emotionally get out of a trade? This and that, those things. So you can see that it does sound like a lot, but it's not really a lot because I'm not doing a huge amount of work. I'm just treating it like a business. What I mean by that is, besides doing my morning routine and in the afternoon doing a meditation and walking the dogs and things like that, going to the gym, I don't need to do a lot of stuff. I'm just basically sitting by the charts for 3 hours in the morning, 3 hours in the afternoon, not constantly by the charts, monitoring everything, because there's some days where you'll have nothing on watch because there's no structure. But then there's some days where some things are shaping up and you will be by the charts for maybe 2 hours, maybe even 3. But the real thing here is that I already know beforehand, because I've prepared myself pre-session to know if I'm going to be by the charts. So then if I'm not, I can go off and enjoy the day. I can go off, go do something else, go out for a walk, can do loads of things. And that's basically the benefit of it. So it's not like I'm coming to the charts every single day looking for a trade. And I think that's a very, very important factor to realize, that if you're waking up and you're just coming by the charts being, all right, cool, what's good today? Let's see what trades we can find, this and that.
you're not approaching it in the right way. Even if you select 2 or 3 pairs in the morning, you have to ask yourself, are you selecting those pairs because you're just selecting pairs, or are you selecting those pairs for a particular type of reason? And for me, I'm selecting pairs because there's a high probability that these 2 pairs or 3 pairs or whatever many pairs, 1 pair is going to go in the next 2 hours on the open of the session. So I'm basically anticipating something, and then if my anticipation is correct, then I'm basically making money with it. So guys, I've got to wrap it up there because I've got to shoot off somewhere, go to the dentist. So I will catch you guys in a live possibly tomorrow. If you guys have any questions or anything, definitely drop me a message. I'll be more than happy to get back to you. And if you want to watch this recording again, I think it will be uploaded pretty soon. So guys, catch you guys later. Hope you guys enjoyed it, and I will catch you guys tomorrow.